Hi, everyone, and welcome to our new and also to our returning listeners to the Gspröch, the informative podcast series by Wyden, the leader in institutional infrastructure technology for regulated financial organizations, covering front, middle, and back office needs. Today, I'd like to talk about Germany and MiCA, the market in crypto assets regulation that came into force across the EU on the 30th of December last year. Along with a strong uptick in interest, volume, and liquidity in the digital asset markets, regulated institutions like banks and brokers have made that conscious decision to enter into the space. Now a regulated framework like MiCA has given them that opportunity to offer products and services to their retail and institutional clients alike. This in turn has encouraged fintechs like Wyden and service providers such as regulated custodians like Tangany to develop and bring to market robust institutional grade technology and services for the regulated market to adopt. Germany was one of the EU economies that was already crypto friendly, with an established licensing regime under BaFin. Also being a member of the G7 has a great opportunity to cement itself as the European crypto hub. However, it's also been at the center of Europe's recent political turmoil with the collapse of the government and an election now due this month in February. Here to help us navigate the state of the current digital asset landscape and market in Germany, I'm extremely pleased to welcome Martin Kreitmair, who is the founder and CEO of Tangany. Tangany is a market-leading provider of custodial and tokenization solutions based in Munich and regulated by BaFin. So, Martin, good morning. Perhaps I could hand the mic over to you to give an introduction to yourself and also to Tangany and provide some insights into what Tangany does, who you serve, and what you solve for them. Over to you.
Thank you, Stuart. Thank you for the invitation today and for the opportunity to discuss a bit the landscape in Germany and in the EU when it comes to regulation. To introduce briefly myself, Martin Kreitmair, one of the founders at Tangany. I'm responsible for sales and market activities, so marketing, representation of Tangany to the market, and so on. So I'm not the responsible person at Tangany for compliance for sure, but of course I'm also very involved when it comes to regulation and adoption of regulation. So what does Tangany do? We are a regulated crypto custodian since 2021, and we provide our service only to B2B in a way that we enable our partners, could be banks, brokers, fintechs, issuers of security tokens. So a really broad set of a target group here. We enable those players to provide some tokenized or some crypto related product to their customers. So for example, we are working with eToro, where the customer of eToro is able to buy crypto, Bitcoin, Ethereum, and so on. I think 100 crypto assets are supported there. And once the customer has purchased the crypto, it's settled with us. We are the custodian in the background. The customer is also our customer, legally speaking, but our service is primarily driven to be sold to those brokers and banks. And in that field, we see a lot of different projects in the market, mostly in Germany, but also in Europe, where we are the engine in the background, powering the wallets, the infrastructure. And with that, we have seen all the innovation and ideas floating around in Europe in the last couple of years when it comes to blockchain, DLT technology, and cryptocurrencies. And we're really looking forward today to discuss with you a bit what's going on right now with MiCA. Other regulations are also coming up, like the travel rule, DORA, but also other things like maybe we even can touch a bit the US, which is turned now a bit more crypto-friendly, which I believe will also have a huge impact on what happens here in Europe in the crypto space in the next couple of years. So yeah, very exciting times right now, I would say.
Absolutely. We are going through quite a lot of volatility. That's not always negative, not always positive. So we'll definitely see how the industry, evolves and matures over the next 6, 9, 12, 18 months, particularly for both of our institutions. We very much focus on regulated entities. So, they really need to make the conscious decisions when they move into digital assets. And that takes us on perfectly to, our main issue or question for today is really around MiCA. So from your perspective as a custody provider who was previously regulated pre-MiCA under BaFin in Germany, what changes does MiCA bring about for you, both for your business and also for your customer base and also for your prospects as well?
It depends, of course, where you're based. If you're based in Germany, you have another level to go, or another step to go to be MiCA compliant compared if you, in France, Italy, or some other jurisdiction. So it depends a bit what your local regime was before MiCA. And if you look at Germany, the German regulation and requirements are very similar to MiCA. So I think the German regulation was also maybe a bit of a blueprint, or at least an inspiration for the EU regulators to create the MiCA regime, meaning we have basically the same requirements here on a national level than we have now on a European level, which qualifies us very easily to apply for the MiCA license and also to passport our license to the European Union. So generally speaking, I believe MiCA it's a good step forward for Europe because it harmonizes the requirements in the EU, what it means to be in custodian, what it means to be in broker and consultant in the crypto space. And it opens a market of 400 million people now for players that are regulated in one of those jurisdictions. And the passporting is quite easily doable. So I really believe it's a step forward. And in that light, we are also very keen to be MiCA compliant and to apply for the license and having the MiCA license hopefully very soon. And also being able to offer our service in the EU without the complexity to apply on local license frameworks, what we had, what was the situation pre-MiCA. So it's a good step forward. And from a German view, the level from national to EU, it's not too steep. So it's a good thing from our perspective, of course.
That's really great. So actually, what you're saying is it sets you up very nicely as an organization, the work you've already done in the past, and as you're currently, applying for your MiCA license in Germany, that allows you with the passports in order to provide your products and services to all regulated institutions within the whole of the EU as well. So effectively broadens your available market and target customer base as well.
Yeah, absolutely. So it opens opportunities mostly. Of course, there will also new competitors from outside of Germany who we will face now for the first time. But I really believe competition is good for innovation, and the crypto space is still very young. And a lot of things still needs to be developed, needs to be created. And innovation is one of the key aspects you need in the crypto space. And now even more when we see the US turning more crypto friendly, which will also kickstart a phase of innovation there, I believe. And usually it tends to a situation where the US players at some point turn to Europe and say, okay, we have now covered the US market and now let's cover and adopt the European market as well. And that dominance is one of the threats I see personally. So I really believe and I hope for the future that the crypto market will be played and served by players here in Europe, including Switzerland, including UK. That's the opportunity now we have at MiCA, as the regulation has harmonized the market, has created a huge playing field, and now we have multiple players operating here, and that drives innovation because here now is the pressure to be one of the players of the future. And in that light, I really embrace the regulation and believe there's a lot of opportunity, but of course also to say now outside of Germany, having less complexity when it comes to cross-border activities. There's still complexity. You still have tax laws and you have other laws you need to take care in each jurisdiction. So it's not like, okay, now it's MiCA here and we can do whatever we want to as long as we stick to MiCA. You still have to apply in that depth local laws on other segments, but it has been simplified on a huge scale.
So, question for you here is that how do you think this potentially positions the EU? We've seen recently in the US, since the Trump administration has come in, about regulation, deregulation. Even in the United Kingdom, they're talking about sort of more deregulation to foster growth. Now, obviously, the UK is outside of the EU, and is feeling that pain somewhat in that respect. So, with this regulation coming in, how do you think it positions EU and the EU financial institutions compared to less well-regulated jurisdictions?
I think that's the question that will be answered in the next couple of years. So I think the US is our major competitor here, and the US players have been kind of tied up in the last couple of years with SEC issuing and charging everyone who did anything in crypto at all. The administration was not crypto friendly, so it was very hostile, the crypto environment in the US, which kept the innovation level quite low. And that is going to change now, I believe. And in Europe, we had the opportunity in the last 5-6 years to be more progressive, be more innovation friendly, and to be ahead of the US. I think we are at the same level right now, so we are not able to really leverage on that opportunity. But now the US is turning crypto friendly, obviously. We on the other side, we have a good regulation already in place, which brings and creates one huge market for the players here, which is, I think, the foundation. If you really want to create champions in that field, you need a huge market of hundreds of millions of people that can be addressed. So we have created the same level here as well. But then the other aspects, we will lack resources like capital, maybe even the governmental approach and mindset that innovation is good. We need innovation. Innovation means risk. Sometimes we have to take that risk. So the mindset, the resources, the capital, it's still the second league we're playing here. It's not like the Champions League if you compare it to soccer. And I think that will be a challenge to keep up with the US in the next couple of years. And they really open the gates and try everything and try to scale as fast as possible. That will really be the challenge to keep up here and to kind of defend the European market with European solutions and players. And hopefully we will manage that and we will not face a situation which we face now in the internet, where no huge or no large players based here in Europe, Spotify excluded from Sweden, but all the other players are from the US or from China. And I really would like to being able to create a new situation in the blockchain ecosphere where we have players based here, regulated here, and headquartered here in Europe.
Absolutely. So in order for that to happen, we need to make sure we have the right infrastructure and we have the right regulation and also the right politics to allow that to happen across the EU. So just turning back to Germany for a second, because this is about Germany and MiCA as well. How has the recent political situation in Germany affected or even impacted the readiness for the implementation of MiCA for institutions and also for service providers?
So, right now it does not affect it, but it did affect it in the last year. So MiCA was known. The information that MiCA is coming is known now for 1 or 2 years. And most of the other jurisdictions in Europe have implemented a national law for an adoption of MiCA and some guidance how to apply for MiCA and how the national roadmap looks like. Germany did it as well. It was ready in April last year. Then the government broke apart in October, I believe. And then there was a lot of uncertainty whether the national law still be executed and approved without functional government, or do we need to stick to the EU requirements? So it's MiCA 1-to-1 our requirement level, or will there be a national transportation or transition here? And it was unclear, I believe, until 2 days before Christmas last year. And that was a lot of uncertainty because nobody knew what are now the requirements to apply. If you're already regulated on a national level, what does it mean if you want now to upgrade to MiCA? a new application, an upgrade application nobody knew. And that created a lot of uncertainty last year. But luckily, that has been solved now. The government, or the remaining parts of the government, has achieved to bring the law through the parliament. And now it's really up to the new government, which will consultate, and hopefully in somewhere April, May this year, to take it from there and hopefully to be crypto friendly, to be open to innovation. But it's a decision we will on. It's up to see what the new government will look like. But until then, there's no uncertainty anymore. I think that's the important thing here for the German players. We know now what needs to be done to be MiCA ready and to apply and to get the license. And then we can take it from there, whatever the environment will be on a political side of things.
That's really great. But I think one of the questions I have for you on that is, because of the sort of turmoil and uncertainty last year, do you think that BaFin has readied themselves in terms of being able to handle all the transition processes or the CASP application? Because obviously there is this transition timeline for, and also grandfathering rights until the 30th of December this year. So there's going to be a lot of movement from institutions who want to go to market, and they need to get everything completed by the end of December this year. Do you think the BaFin is ready for that?
That's a very good question. And I believe 2 weeks ago, or a month ago, I had my doubts whether they will be able to really review and approve and facilitate all the applications that are on the table by the end of the year. That stance has a bit changed from my personal view, at least, as we have seen a couple of players have already got their MiCA license, like I think Bitpanda and Crypto Finance. I think one or two more. And so BaFin really reviewed the application in a matter of weeks instead of months and quarters. And seeing that kind of pace here makes me really positive here, thinking that BaFin will be able to execute and to conclude the transitional period by the end of the year. I might even not be surprised if they manage to be even faster on being ready or being done with all the migration applications from the existing players which are already operating in the market and have a national license in place by summer this year. I think there's a really good speed there, there's a good mindset there. And most importantly, there's the will to get it done. So there's always, you never know, are they interested to get it done or they're not interested to get it done? And what's the mindset right now in this particular topic? Now I have the feeling with the MiCA, there is the interest to get it done because the other jurisdictions are also in the same mindset to get it done, to enable their players to be MiCA ready, to be licensed, to be passportable, to operate in the European market. And that's also a thing of competition in the end. Does Germany want to be competitive with other members of the EU and vice versa? And I believe there's some kind of competition ongoing in the authority landscape. And that makes me very positive, to be honest, that BaFin will also be able to facilitate in a matter that is not an obstacle for the players here in Germany, but rather also an opportunity, or at least on the same level to the other jurisdictions in the EU to compete with the players from Spain, Portugal, and all the other members of the EU.
As you said previously, competition fosters innovation and also growth. It forces existing, banks, brokers, service providers like us to be able to react to change and to competition. So I think, as the MiCA is rolled out, we'll see in the next 6 to 9 months, if we have to do this podcast again, sort of like early September, we can look back at some of our sort of thoughts and predictions and actually say, did this come about? But I'm pretty confident that we will see a lot of institutions coming to market this year. And as long as the regulators have the capacity to approve these CASP licenses, then we'll see a lot of growth over the next couple of years. I think particularly from the retail space, by whereas a bank or a broker, who is that trusted partner, will be able to offer those buy, sell, hold services. A lot we're seeing at Wyden is their closed loop buy, sell, hold services. So you can't transfer assets in or assets out, but it gives the retail customer the comfort that those assets are assured under the bank insurance scheme of their relevant country they're actually living in, compared to trading on exchanges like Coinbase and others, which are fine. But I think the banks and brokers from the traditional asset industry will give a different perspective of growth to the digital asset landscape in the EU. However, moving on to the next question, unfortunately, MiCA is not the only sort of regulation that our clients are actually faced with. If we move on to another hot topic of regulation, which is actually DORA. DORA, for everybody, stands for the Digital Operational Resilience Act. It's another EU-wide requirement which came into force in January 2025. We at Wyden are actually getting a lot of requests about DORA from both our existing regulated EU banking and brokerage customers, as well as new prospects, covering how we support the digital operational resilience needs at being a third-party IT and service provider. Can you elaborate, Martin, for how DORA impacts Tangany and your customers as a custody provider?
Yeah, that's another huge topic. So we even have a third one with a travel rule, which also came into effect by this year. But yeah, touching on DORA first, maybe. Of course, as a regulated institute, we face it from two sides. On one side is our customers and partners asking us about DORA, and the other side, and that is maybe even more challenging or time and resource consuming, is from our tools that we use. So generally, we are, as a custodian, we are not outsourcing to the bank or to the broker, as we usually are the custodian to the end customer. So it's not through the bank, through the broker that we are being used, but rather we have a direct relationship to the end customer, meaning for the bank and the broker and all the other partners of Tangany. There is no outsourcing question in the room that needs to be answered, as we are not outsourcing anything at all to us usually. But on the other side, with our partners, we use also a lot of crypto tools like, CoinMarketCap for crypto prices, or Channelizers for crypto AML, or also CoinFirm, which has been rebranding to MiCA, I believe. So we are using a lot of tools, and it happens very often that when our team is reaching out, or outsourcing team is reaching out to them, they have no clue what we are speaking about. Especially if they're based in the US, we also use US-based solutions, tech solutions. They have no clue what we are speaking about, what we do want. And it's really challenging because DORA gives you not much flexibility here. DORA states very clearly, if you use service A and it's an outsourcing or even a material outsourcing, you have to do B, C, and D. And if you are not able to do B, C, and D with your partner A, then you cannot use it. And that's really a very tough situation, because many are not prepared. Many have no clue what we are speaking about. And being faced with this situation, we might have to migrate to another solution. And sometimes there is no other solution, or other solutions do not provide the same quality or service level. It's not an environment you won't like to operate. And taking it very clearly, DORA is it's active since January, so we have to be compliant with that. But knowing that no one is compliant yet in the market, not banks, not tech providers, not fintechs, not regulated, that's the situation we're operating in. And so from our side, we do the best we can. Our outsourcing team is really running hot here. Being in communication and in touch with all the players we are using for our solution, getting those all DORA compliant, and but that will still take more months, maybe not months, but at least weeks to work through the list and having a check mark in each row there. So it's already huge. It's a lot of documentation, a lot of work to be invested. Sometimes I see the benefit of it. Sometimes I don't. Sometimes I only see the bureaucracy here and the time that is being invested without the benefit and the value. So it's really a mixed view here. but it needs to be done, and we are facing it. And Tangany, for it, at least we purposely are based in Germany, not only because the founders have been living in Germany, but we also discussed internally, does another jurisdiction make more sense for us? Have we any regulation arbitrary opportunity there? But we really purposely are based here in Germany, as we believe it's also some kind of testimony being regulated here. And that means we have to fulfill regulatory requirements 100%, sometimes even more, 110%, gold plating we face sometimes. But it's also some kind of testimony or something you can use as a player. And so that's where we operate right now. It is very challenging having DORA now in place, having MiCA where we need to apply for an upgrade license, and then having travel rule, if I may also touch on that briefly, where we also had the situation, everyone knew it's coming. Everyone knew we have to find a solution with the other CAS, so the other regulated players in Europe, and even outside of Europe. It's a global regulation from the FATF. I think Switzerland has applied, and it's into effect for 2 years now. But nobody knew what the solution might be, and now we face the situation that there are a couple of tools in the industry that can be used, like Trust from Coinbase, Notabene, SumSub, 21 Analytics, and a few others. And you need a solution where you can really exchange information for every transaction from one CAS to the other CAS. And there's not one holistic approach here. Everyone is using now one tool or maybe two tools. And you have to really figure out how to exchange information that you're required legally to exchange for a transaction between CAS, or even for transactions from CAS to an unhosted wallet to a self-custody wallet. There you need some kind of wallet verification and validation. And that is also a very challenging topic because you need to adjust the processes for a deposit, withdrawals, for settlement between market maker and custody. And every transaction needs to now be travel rule or transfer of funds regulation compliant, how the regulation itself is being called in EU. And all three coming into place and into effect in the same month. It's a huge barrier, a huge wall of work you need to overcome now. So I personally would have preferred to have a bit more streamlined, one in the first quarter, one in the second, one in the third, maybe this year, to streamline your resources a bit more and to optimize your resources. Now everything coming into in January, okay, that's the situation we are facing now. But it's a huge. So the first quarter at Tangany, it's not a nightmare, but it's very challenging, and people are really running on the limit here right now and trying to get it done so that we may and hopefully see a bit more calming second quarter this year.
You've got a great team at Tangany, which I'm sure that you've already built some internal resilience to handle all of these new regulations and also meeting the requirements of your customers. But so if we talk to turn back to digital assets in general, when your teams and you're discussing with a new or potential client, what do you see as some of the top priorities or even concerns that they're highlighting to you when they consider an entry into digital assets? Is it just around regulation? Is it around finding clients? Is there a market? How long will the hype cycle be? What do you see some of the sort of feedback you're getting from these prospects?
It depends, of course, on the industry. If you're speaking with brokers or neo-brokers, which themselves are started as a fintech 10, 20 years ago, they know how it works and they are just about what's the business case and how do we get it executed and online. So it's a very clear roadmap from A to B, from the start to the goal. So there's really about the tech, what needs to be done on a contractual side of things, what needs to be done on the regulation aspects. It's completely different speaking with banks and institutions. The tech itself is also challenging, of course, because you often need to connect and plug into legacy systems. But that's not really the hurdle we are facing there. It's more about regulation itself and compliance. Also the contractor stuff, it's easily doable. Commercial is usually no issue. Working together, setting up the teams, the streams, to work together. A no-brainer usually. But what really takes time is compliance. So if a bank goes into crypto and now they're even more able to do it because everything is regulated, they do not have to operate in a gray area anymore. They can really reference to the regulation which is in place and outline that they are fully compliant with everything. But still, you have so many departments in the bank that needs to give their approval. You have the outsourcing, the AML, data protection, risk management. I think 10, 15 departments, and all those departments need to understand what's the project scope, who are the partners, are the partners who are reliable, can they be trusted, what is the user product, so what is the product the user is facing, what are the risks, could the user be misguided here, so banks will never ever allow an investment into meme coins, for example, into Doge or Shiba Inu, or even the hottest meme coins, only for the reputational risk they're facing as a bank offering that kind of investment. So that's the situation. For example, we see this, we are working with two Volksbanken here in Germany. They are doing Bitcoin only, because Bitcoin is kind of approved and has been tested and is known what it stands for. So that is what they're offering. That's it, nothing more. But that is also we see with other banks telling us, okay, we want to offer 1, 2, maybe 5, 10 cryptos. That's it, not more. That's of course a good step forward. But if you look into on Tangany, we also work with crypto native exchanges, neo brokers, and other players. So we have a good view, and you at Wyden, I think you have the same numbers and insights where you see what's the potential here. So what would be the potential if you offer 300 crypto assets, or to only 1, 2, or 5, or 10? And it's easily, you can double your trading volume, or even increase it by 3 or 4 times, only by having the opportunity to people letting it buy, sell, buying another asset, selling it again, buying the next asset. So there's a lot of opportunity here when we speak about trading volume and revenues. But on other sides, I believe it's also a good thing that banks are a bit more careful what they offer their customers to invest their euros into, as those customers are often first-time people who are going into crypto for the first time. And if you're going into crypto first time, you should maybe not start with Doge or some meme coins. You really should get a feeling for crypto by starting with, Solana, Bitcoin, Ether, and so on. So I believe it's also, I'm convinced it's a good thing. They have a limited scope to get into the market compared to the broker and the crypto native players, where you have another clientele playing around and working there or investing there. But I think now there are solutions on the market for everyone, for people going into crypto for the first time, but for also the players and people who are in crypto for 5-10 years now, knowing what they are doing, hopefully. So that's the positive side of things, but really compliance of the banks takes the longest every time.
So, we talked about MiCA and DORA, and you brought up the travel rules as well. So it's like a triple whammy of regulatory intervention coming into the market. Again, can foster growth and innovation, but also brings a whole new level of scrutiny, but again, opportunity for regulated institutions to offer products and services. So from the perspective of custody, how do you think sort of MiCA, DORA, travel rule will affect the custody landscape in 2025 and going onwards? Do you think that banks, for example, will not choose to insource custody and become a custodian themselves, but actually go through the sub-custody route and actually outsource to regulated custodians like yourself? Because obviously the time to market would clearly be quicker for them to do that. What are your perspectives there?
Yeah, I believe we will see both scenarios, or even more scenarios banks are choosing here. We will see banks going into crypto in a way. We provide primarily, we're really a custodian for the end customer, and they do not touch the custody aspect as it's not their core business activity. Banks usually are taking care of money and trading opportunities. but also for securities. Very often securities are not managed and held with the banks you have purchased it at, but with another bank in the background. And I think we will also see the same with the crypto custody business, that banks will fully outsource it, not from a compliance perspective, it's not outsourcing, but relying on a partner taking care of it. But then we will also see banks going into crypto custody themselves, applying for a license to simplify also the service, as you have not to onboard the user, the customer with a custodian directly, but you can still do it directly with the bank itself. And then they're outsourcing kind of their service to a custodian, taking care of the infrastructure, of the operation, the backups, everything that needs to be done with a custody service. We call it a sub-custody model. It's also regulated in MiCA. I think it's Article 75. What are the requirements to being a sub-custodian for another regulated custodian? So the path is clearly there. From our perspective, it might not even be outsourcing from a compliance perspective. So that's also what we will see. And maybe we will also see banks going into legally being a custodian and also ramping up the tech behind it. But I believe there won't be too many banks doing it because it's really challenging. And in the end, custody, it's not a revenue driver. It's a commodity you need to do or you need to have. But you do not do it to have an USP or to create revenues out of it. And that's that business it's a scale of economics. You need asset and custody. And we also see it. We are sitting right now at 2.5 billion euros asset and custody. And we see what is the potential here. And we know being really resilient and reliable and having a very, very profitable business case, independently, whether we are in the bull market or in the bear market. I think we need another 2-3 billion on the sheet in order to being really stable. And you have to live up to that first. And for us, it's easily doable. As we have, 10, 15 banks working with us, we can scale very easily there. And numbers are doubling every 6 months right now. But yeah, it's really about numbers in the end. And I think another thing for banks, I believe it's a reason why they are not too eager to be in custodian themselves is also the core capital requirements coming now with Basel III. I think it comes into effect by early next year, where you also are required as an CR institute to have core capital deposit if you touch cryptocurrencies, which we as in crypto-only custodian do not need to fulfill. So it's another huge question to be answered on the institutional side. Do we want to do it? Or can we do it more efficient by using crypto custodian and having not those strict core capital requirements, having more ability to work more efficiently with our capital on the bank side?
That's great. And that's sort of great insights. Sort of one last point on this question though. Do you, in traditional asset markets, we've had a long-standing custody infrastructure for traditional assets where, from a fiduciary perspective, there needs to be risk diversification even at the custodian level, right? So if a big pension fund or a plan sponsor or a life insurer or a bank has holding assets and they outsource custody, they generally outsource custody to 2, 3, 4 custodians, even if it is BNY Mellon or Northern Trust or BNP Paribas or Cassis or somebody like that. They're AAA rated companies. They're probably not going to go down, but it's all about fiduciary management and risk diversification. Have you seen any trends in the market yet for banks wanting to do custody diversification?
Not yet. I believe it will. So I believe banks are starting with the market making or market maker side of things, the liquidity providers, where they onboard 1, 2, 3 players to having the best price for trading and having a good resilience, or if one market maker is not reachable at a certain point of time, to really have the best SLA in place here. And once that has been done and achieved, and I think it will take 1, 2, 3 years for them, I think then the custody side of things will be on the radar for the banks to also diverse there with one or two more players for splitting and diversing the risk associated with custodians. But I think it's more typical for the next coming years, at least from the players we are working with and we are speaking with. Where we see a bit another stance is this crypto exchanges, especially those are now being regulated with MiCA. There we see, interestingly and surprisingly for us at least, they're interested to also onboard new custodians, or custodians for the first time. So they are their own custodian, but they are interested to onboard a second custodian or a third custodian to also spread the asset in custody between those players and solutions. I mean, it's surely also as part of their BCM processes, a business continuity management process in case their own solution has some issue or I don't know, whatever the reason might be. But surprisingly, we see more interest from their side already this year. And we expected that banks will also touch that topic maybe 2027. That would be at least my personal expectation.
Thank you for that. And just continuing that, maybe into the last question for today is, what do you see as really going to be some of the trends and developments that will be coming into the industry in 2025? Clearly driven somewhat by regulation like DORA, MiCA, and the travel rule, but also as well, where do you see some of the new sort of developments and innovations?
I believe this year will be a year of regulation. I would assume that most players are really occupied getting regulation fully into place and working 100%. Especially travel rule will take more time until all those CASP have the communication set up and having the mean to facilitate transaction and to send travel rule required information from one to the other. And I believe it will take a lot of focus this year, but maybe to also bring up something positive in terms of innovation here, what could be a bit under focus this year, where I see a lot of movement, and I believe it will be more important in the future are Euro stable coins or also other jurisdictional currencies as a stable coin. As I believe there's now more interest there to facilitate settlement, for example, between Europe and Asia or Australia. Where we also have first discussions with some players telling us, okay, I'm selling to Europe and I'm getting euros from Europe to Singapore or Australia. And it takes a lot of time. It costs a lot of money. Can only be done on work days. I want to do it on DLT infrastructure with less cost in real time, more transparently. And I think what's needed there is really a regulated euro also between counterparties in Europe to facilitate transactions and settlements. Also for crypto trading, for example. So crypto trading is still facilitated in a way that you have the crypto settlement and the euro settlement in the SWIFT or in the banking system. You could easily do it on the blockchain as well, the euro stream. And then you could really do it in a way that you have a smart contract logic. Only if the euro is sent, the crypto are also settled at the same time. And there are a lot of ideas, innovation you can create once a stablecoin is there, a stablecoin you can trust on. And there are upcoming stablecoins like from DWS, from subsidiary part of the Deutsche Bank, other Euro stablecoins as well. And I think, I believe that really kickstart a lot of ideas and a lot of innovation in the next coming years. And we see right now the spark of that kind of innovation cycle.
Yeah, and I think just on that last point, I think we're definitely seeing at Wyden a lot of questions around the whole settlement piece. And because we look after the whole trade life cycle, not just the pre-trade, the trading, the execution, but also the settlement and reconciliation, we're definitely seeing questions around how do we do settlement, because we're trading in buying and selling Bitcoin or ETH or other tokens or assets, but we need to settle in euros or in dollars. And if we could keep it all in one ecosystem, so on chain, via using DLT, that would make life a lot easier for our banking and brokerage customers. So I definitely see your point, and I hope that we definitely see innovation around the whole settlement process and using stablecoins. Martin, that was really an excellent podcast session today, and I'm sure our listeners, wherever and wherever and whenever they're listening to this podcast, have really benefited from the insights and views on the digital marketplace in Germany. Now the regulations like MiCA, DORA, and also the travel rule are in place, but also what some of the growth opportunities are, as well as some of the challenges that need to be considered. So on behalf of our audience and the whole Wyden team, I'd like to thank you for taking this time and your time out of your busy schedule to be our guest on this edition of the Gspröch. We have an awesome lineup of guests already signed up for the first half of 2025, covering all aspects of digital assets, from technology to regulation, trends and market views, as well as what is going on in different countries and jurisdictions around the globe where digital assets are being regulated and adopted at pace. So stay tuned to the next podcast announcements. And if you like what you've heard and seen, please feel free to spread the love and the word for the Gspröch. And with that, I bid you all a good morning, a good evening, and a good day.